Hi, I'm Irene Estrada, Managing Director in PwC's Personal Financial Services practice. I'm here to talk about the recently released final regulations relating to the generation skipping transfer tax exemption that provide potential relief to taxpayers. The GST tax is imposed at a flat 40% rate on the taxable transfer of assets to a skip person in excess of the transferor's GST exemption amount. On May 6, Treasury released final regulations under Section 2642G1, which detail the circumstances and procedures under which extensions of time will be granted to make allocations in certain elections under Section 2632 related to the generation skipping transfer tax exemption. In 2008, Treasury originally published proposed regulations under Section 2642G. And as drafted, they would have limited GST relief by preventing taxpayers from correcting inadvertent or unintentional elections relating to GST. The final regulations offer taxpayers an opportunity to remedy errors and oversights related to GST allocations and elections. They clarified that relief may be available in appropriate circumstances to revoke or correct GST elections or missed elections and allocations. However, the final regulations also indicate that relief will not be available for manual, i.e. affirmative, allocations of GST exemption except under very limited circumstances. Guidance also is provided regarding the substantiation needed to accompany relief requests. For example, taxpayers not only must satisfy the documentation requirements, but they also must establish that they acted reasonably and in good faith. The final regulations provide a non-exclusive list of factors that will be considered to establish whether the transferor acted reasonably and in good faith, which include intent, including evidence of intent contained in the trust instrument, intervening events, lack of awareness, consistency, and reliance on the advice of a qualified tax professional. Despite this favorable guidance, taxpayers should make every reasonable effort to file gift and estate tax returns with correct elections and allocations of GST without needing to rely on costly relief requests that are not guaranteed and could be denied on other grounds. If you have any questions relating to GST, please reach out to a member of our Personal Financial Services team. Thanks for watching. This has been PwC Tax Insight in Brief.